What's up, YouTube? My name is Adam and this is Broke Man Finance. The market has been horrendous the past couple of days. You're frustrated, you're aggravated, you're irritated. I get it. But you can look at this in a couple different ways. On one hand, you can be depressed and you can loathe over your portfolio. Or you have the opportunity to be optimistic and look at this as a chance to buy stocks on sale. Some of those stocks that you thought were too expensive or overvalued are now starting to tick down. So it may be a perfect time to, maybe you want to average down. Maybe you want to get a couple of stocks that's on sale. When there's blood in the streets, that's the time to buy. And right now, I'm not going to say that we're not in any kind of a crash yet, right? It's a very small, slight correction, if even that. Today, we're talking about some of the hottest hype stocks out there, but are they too hot and hype, or are they still a definite buy? We got Workhorse, Hyliion, NIO, Tesla, and of course, Nikola. We're going to talk about some of the pros and cons that goes along with all of them, but we're also going to unveil the reasons why you may want to just try to relax a little bit on these EV stocks. It may be time for us to chill and let that share price fall back to reality. There has been so much hype leading up till now with SPACs, USPS contracts. Tesla has been baffling so-called experts, but they are seeing a drop as Elon failed to really deliver any actual good news on battery day. And as you all know, Nikola has done what Nikola has done. The EV or electric vehicle market has been trending with what Tesla is doing. Right now, Tesla is dropping like an anchor, as are some of the other EV stocks. So you can expect more EV companies to follow suit. The question is, do you buy, hold, or wait for more dippy? Let's get one thing clear right off the bat. I think all of these companies, other than Nikola, they're terrible. But I think all of these companies are good, legitimate companies. But as a smart investor, like I know all of you watching this are, because you watch this channel, but as a smart investor, at some point you have to ask yourself, does the share price justify what the company is producing? Does the revenue justify the share price of the company? At what point would it not justify it? You have to sit back, try to detach yourself away from it, get the FOMO out of there, get your emotions out of it, and look at this from a reasonable perspective. It's not throwing shade, it's not throwing hate. They're all good companies. But if Workhorse goes to $500 tomorrow, would that be overvalued for you? Let me answer that. Yes. It is very hard not to get manipulated by all the excitement and all the hype. It builds up this big ball of FOMO we just have in our chest, and it's so hard to be patient sometimes and just wait the thing out. Warren Buffett said it best, no one wants to get rich slow. So if you truly believe in NIO, Hyliion, Workhorse, Tesla, then we need to try to be patient and wait for that incoming dip, because there's going to be more of a dip than there already is. There was a great dip today, and I would not be mad at you for going ahead and starting to buy some more. Right now, Tesla's down almost 14%. NIO's down nearly 8%. Workhorse dropped 16.5%. And Hyliion is down almost 8%. This video is not throwing shade. I want to make sure you understand that. I want to make sure us, and I say us as in we, because we're in this thing together. I've got shades of EV companies too. But I want us to make sure we get the best bang for the buck. I want us to get as many shares as we can for the best possible price. I would rather you get 2 shares for $30 than 1 share for $30. That way, we get profit. We get those capital gains, and all is good with the world. Let's start with NIO. Let's just get one thing out of the way. NIO isn't Tesla. They're not going to be Tesla. Are they a good company? Yes. Can they be a great company? Absolutely. Are they going to be Tesla? No. In fact, China has 14 other EV competitors fighting it out right now, 2 of which are Audi and Mercedes-Benz. You may have heard of them. This one also includes one that is backed by my main man, Warren Buffett, BYD. But let's compare NIO in 2019 to Tesla in 2014. That's the year Tesla sold 22,000 electric vehicles, approximately the same number that NIO did in 2019. For more context, in April alone, BYD sold 12,262 electric vehicles. In April. NIO doesn't even produce its own cars right now. Instead, the car company contracts with a state-owned, not even gonna try, automobile group for production. Bottom line, this company is moving in the right direction. Their financials are getting better and better each year. They're selling more and more cars. They're not even just into cars. There's other things that they sell. So they're not just a one-trick pony. But their share price was getting a little bit inflated. It was getting a little bit too inflated for me to be comfortable investing into NIO anymore, because the share price is getting a little out of control with what I felt like they were actually worth. They've jumped 150% in less than 3 months. NIO was just at $6.86. Right now, even though there's a dip, I think there's still a little more dip to come, and I think you can get in at a better entry price. One company that I've been digging for a while now, and so is my friend Andrew, my partner in this channel, one company that we've been digging on for a while now is Workhorse. So please, before I get all this hate from the Workhorse lovers, hey, I'm in there with you. I've got shares of Workhorse right now in my portfolio that just got smacked in the face today. But how much would you say is too much for the share price? Now remember, they have a lot of promise, but the market cap is up 2,400% since June, and the stock is up 1,400%. We need to start pumping the brakes a little bit until we see a little more revenue. I would really like to see the stock back under $20. I just don't think that market cap, which is an insane market cap for where we are revenue wise, they're just not producing enough cars right now to justify that cap. And I would really like to see it back under $15. That's when I would really start putting some money back into Workhorse. There's a lot of people that's been piling in a bunch of money as of recent. So if right now it's already under what your average share price is and you can go ahead and start averaging down, I would take advantage of that. But if you've been there from the beginning and if you were there from the 2018 days at 78 cents, 86 cents, then by all means, I would wait for that share price to continue falling, because I think there's more dip coming for Workhorse. I know nobody likes to hear that, but think about it from a long-term vision point of view. If you can get more for your money, we're not worried about the short term and what the share price is going to be tomorrow. What's it going to be in 10 years? That's what you got to ask yourself. So if that share price can keep on dropping some, fine. That just means you get more for your money. The share price is going to continue to drop at some point. There's going to be a dip. It's going to happen. That's going to be the time to take advantage, have some money set aside. If you're really long on this company, if you really believe in Workhorse, then I would have some money set aside. As soon as that thing drops, I would pump the money in there, get as much as I could out, and then leave it alone. Just to put it into more context, think about it like this. Workhorse's market cap is double what Hyliion is. Just food for thought. One would think that all the issues that Nikola was having would drive more investors to Hyliion, because for Hyliion, whenever that happened with Nikola, their moat just widened because there's not that people really that competitive in the market yet like Hyliion is. But that may not have been the case. In fact, it may have had an opposite effect and made people just more nervous about that entire industry. Hyliion is turning out to be an incredible company that believes it can churn out some legitimate revenue over the next few years. I also believe it can. However, is the current share price accurate for where the company currently is? I gotta say no. I like Hyliion, I do, but if I'm being honest with myself and I'm being honest with you, and you need to be honest with yourself, we're all hopeful that these share prices are going to remain high, but is it justifiably high? Although the share price could continue to go up and up and up and never come back down, I just don't see that happening all the way through the listing date. The merger vote is on September 28th, and soon after that, Tortoise Acquisition will become Hyliion. I don't believe in investing and buying into an IPO or a reverse merger like the Tortoise Acquisition in Hyliion on the day it gets listed. Historically, there's always seems to be a run up and then a drop off. That's when I want to come in. I think there's a lot of hype that's going to go into it as it goes up. There's a lot of excitement into it, and it artificially inflates the share price. I'm not alone in this either. Our friend in finance, Jeremy, from Financial Education, which a lot of you probably subscribe to him, and if you haven't subscribed to us, make sure you do that as well. But he never buys an IPO as soon as it's getting listed. And Warren Buffett, the Oracle of Omaha, hasn't bought an IPO since the mid-1950s. What does that tell you? Again, I'm not throwing shade at Hyliion. I honestly believe that they are going to be an incredible company. All I'm saying is I think there is an impending dip. There is a dip coming, and that's where I want to buy in because I want to get as much for my money as I can. I'm in for the long haul. I'm not looking at this in the short term. I look at everything in the long term. So if I think I can get more for my money after they merge and they dip, well, that's exactly what I'm going to do. One of the hardest things to do, and this is one of the things I work on in every facet of my life, is having patience. Everybody thinks that it has to happen immediately, and if they don't get in, they're going to miss an opportunity. That's not the case with the stock market. If I was going to buy any dip right now at this very moment, then I would look at Tesla with the dip they had today. I think it's a good time to get more Tesla stock averaged down, or use this as an entry point into the stock. Being down 14% right now for Tesla could be a very good thing for us. The last company we ever need to worry about bouncing back after a dip, for God's sakes, is Tesla. So with all that being said, I hope you take a moment to really look at whatever EV stock that you're bullish on and really look at that market cap, look at that revenue, look at what they're producing, and really think about what a justifiable share price would be, and then wait on that to happen. There are always going to be dips. You're not missing out on anything. I don't care what it runs up to. And on that note, thanks for hanging out with me today. I hope that made a little bit of sense. Stay safe out there, and I hope you take care.